I'm speaking with Hugh Selby-Smith, Co-Chief Investment Officer at Talaria Asset Management. Welcome, Hugh.
Hello, James.
Hugh, we were delighted to host you at our Investment Leaders Forum in Queenstown, discussing really salient aspects of portfolio construction at the moment. We had a very diverse group of delegates bringing extensive experience from the advice landscape. What insights did you gain from them during the event?
I think the next 10 years there's a high likelihood is going to be quite different for savers and practitioners than the last 20 years that they've experienced. And the key thing I took away is that there's an excellent range of different strategies to be able to diversify.
What are the parameters of your current investable universe and how do you see that evolving?
So it must have a developed market listing. It must have at least 30 million US of daily turnover. So that means there's about 1,800 global securities. It's our opportunity set on behalf of our investors. I think over time, I think that's going to shrink. And the reason for that is that private markets are playing an increasing role in public markets. And therefore, a number of companies that would have looked to ultimately go public are going to stay private for longer.
Is heightened volatility a good thing for the adoption of your strategy and really that you'd prefer to see it elevated and maintained at those levels?
A regime of higher volatility is good for our strategy for three explicit reasons. One, we get paid more for doing exactly the same thing that we've always done over the 18 years. Two, there's a bigger buffer for first loss in terms of the strike price through our implementation process. And three, and I think often not appreciated, is in periods of heightened volatility, the opportunity set of securities that we can actually commit capital to generate equity-like returns, whether we own them or not, expands.
How do you see the adoption of strategies that lean on options in the Australian market developing over the next few years?
I think it's only going to increase, and the reason I say that is that we are going to be in a position for the rest of our investable careers, all the people in the room at the conference, of financial repression. That's really governments directing the flow of capital away from the private sector to fund the huge levels of government debt that we see all over the world. And that means that alternative yield strategies are going to be increasingly important in the role that they play in people's portfolios. And as a result, the financial services industry is going to reflect that.
What key messages do you really hope that attendees to the Investment Leaders Forum took away from the Talaria philosophy and approach and your story?
I hope they recognise that investors must be paid for taking risk. I think the second thing is that there is opportunities to diversify by strategy type, and we saw that not only from Talaria but a whole range of our peers that presented at the conference. By region, we see too much concentration in one region in the world, notably the US. And thirdly, really by sector. And so I think that that's really what I'd like people to take away.
Hugh Selby-Smith, it's been a pleasure.
Thanks, James.